Money market is an interest-bearing investment where the interest is calculated monthly. It's a low-risk investment with an element of stable returns. The money that you give your money market fund manager is invested in fixed deposits, accounts, treasury bills, or even commercial bonds. Now, in this video, I'm not going to talk about the definition of the money market fund, but I'll explain to you how the calculations are done. So, in my spreadsheet, I'll first of all explain about the two rows here. One talks about the rate, the days in a month, and the daily interest. One thing I'll have to point out here, the rate that I've mentioned in this spreadsheet is not fixed. It varies day to day. And this is a quick overview of one of the money market funds that I've invested in, where the rate keeps on changing day to day basis. So whatever you see here, we are going to use it as an example, but not exactly what is applicable, and to show you how your cash adds up on day to day basis and how it's compounded at the end of each month. So let's go ahead. Your daily interest is calculated from the daily rate divided by the number of days in a year. So what you're gonna earn at the end of the day is 0.027397%. This is what you earn from the amount that you invest. 30 days, I've given it a flat figure for this calculation. But of course, with the change in months, this changes as you go along. Let's go ahead and see what happens on the first and the second month. Assuming you invest 100,000 in money market fund. What happens? When you invest this amount, the daily earning is calculated by multiplying the daily interest of 0.027397 multiplied by 100,000, and that is your daily earning. So if you invest 100,000 on day one, you're going to earn 27 shillings and 40 cents. At the end of the month, you multiply that by 30 and we get 821.92. I've added this column as a running total just to show you how these funds build up each and every month. Now, in the next month, what will happen is whatever you earned previously, which is 821, is added to your initial contribution. And this is what is called compounding. Compound interest. Compound interest is applicable on month-to-month basis. So now, the second month, your calculation is based on that total value that we've seen, which adds up to 100,822. Yes, the difference is around 22 cents. The same applies to the month, multiplied by 30 days, and we see a difference of around 7 shillings from the previous monthly contribution. Now, this is where this value changes. So your total interest in month number 2 is 1,650.59. The third month, same thing happens. Your second month total, you get plus interest, and that's the amount that we see here is equals to 101,651. Same thing happens here, and we see the an increment of around 23 cents into your daily earning, and this is your monthly earning and summation of the running total, which is apparently now at 2,486.08. Okay, so let's pull in these formulas to see what will be the final outcome on the 12th month. Okay, at the end of 12 months, from 100,000, you now have an interest of 10,321.32. To some people, it's not much, but I'll guarantee you, if you were to invest this money into a savings or current account, the bank will give you is around 2 to 3% of your savings. So you can imagine 2 to 3%, just a small figure. So the bottom line here is, whatever you do with your money, don't keep your money into a savings account. Put your money in money market. But something that I need to explain about this amount here is that the total of what you get in each and every month consists of withholding tax. The withholding tax is 15%. So actual amount that you get as a net, you multiply 0.85, and this is your net income from money market of 100,000 at the end of 12 months. Let me give you some tips and highlights on how you can utilize money market. Let's say you have 1 million sitting somewhere. And I don't want to look like I'm just quoting big figures, but I have had people talking about big amounts into their savings account. Now, with this amount, your net is around 87,731.32. Imagine if you had this amount sitting somewhere. You have school-going kids. Maybe this will cater for a term or 2 terms of your kids going to school. So you can literally take your kids to school from the interest rate that you earn from money market. You don't have to struggle on looking for school fees. And this is how this thing works. What you're actually doing here, if you look at this column, whenever you sleep and wake up, you have 273.97 on month 1, and by the 12th month, you're actually sleeping and waking up with around 300 in your pocket every day for just putting your money in money market. The margins, you feel like they're quite small, but this is a huge significant difference. If you do small amounts, if you leave your amount to compound and maybe you keep on adding, let's say 10K every month, you'll see the biggest difference it makes. Now, my point here is go ahead and remove the money that you put into savings account, a current account. Look for a money market fund manager. There are many out there which can give you good services. Some of them allow even deposit and withdrawal instantly from just your mobile phone, or such a shortcode as USSD. So my point here is take advantage of money market fund. Now you know how this is computed. If you receive your statement, you'll be able to tell how these amounts have been arrived by your money market fund manager. If you see something of a difference, then you can go back and question by the fact that you have the knowledge on how calculation is done. Thank you so much, guys, for your time. And in my next video, I will do some comparisons so that you can be able to see how does money market fare on with SACCOs or other type of investments. Thank you, and see you in my next video. Don't forget to subscribe.